Have you ever wondered how to get into real estate investing? It's a question that piques the curiosity of many, lured by the promise of substantial returns and the thrill of venturing into something new. Real estate investing offers a world of opportunities, yet it's often shrouded in mystery, leaving potential investors puzzled. Common hurdles include lack of knowledge, fear of risk, and the daunting task of starting from scratch. Well, today we're going to break down the process of getting into real estate investing into simple, manageable steps. The first step in any journey is understanding the basics. Let's dive into the world of real estate investing by getting familiar with some fundamental concepts. Start with identifying the types of properties. There are primarily two kinds, residential and commercial. Residential properties include houses, apartments, townhouses, and so on, where people live. On the other hand, commercial properties are spaces used for business purposes like offices, retail stores or warehouses. Next, let's talk about investment strategies. Some investors choose to buy properties and rent them out for a steady income stream, known as rental properties. Others prefer to buy, renovate and sell properties for a profit, also known as flipping houses. Lastly, never underestimate the importance of location. It influences the property's value, demand, and potential profit. Whether it's a bustling city centre or a serene suburb, the location can make or break your investment. Once you have a good grasp of these concepts, you're ready to move on to the next step. The second step is research and planning, a crucial stage that often determines your success in real estate investing. This isn't a step you can rush through or gloss over. It requires dedication, patience, and a keen eye for detail. Let's start with researching the real estate market. A well-informed investor is a successful investor. By studying market trends, you'll gain a better understanding of the property landscape. Are home prices trending upward or downward? Is it a buyer's market or a seller's market? These insights can guide your investment decisions. Understanding property values is another critical aspect of research. Knowing the value of properties in your target area will help you recognize a good deal when you see one. It's also essential to identify potential investment opportunities. Look for properties in up-and-coming areas or properties that are undervalued and have potential for improvement. Now, let's talk about planning. This involves setting clear, achievable goals. Are you looking to flip houses for quick profit, or are you more interested in long-term rental income? Your goals will influence the type of properties you invest in and the strategies you employ. Creating a business plan is an integral part of planning. This is where you outline your investment strategies, financial projections, and contingency plans. A business plan acts as a roadmap, guiding you through your real estate investment journey. It also helps you stay focused and on track, even when the going gets tough. Plan your finances carefully too. Real estate investing requires capital, and you need to know where that capital is coming from. Will you use your savings, take out a loan, or bring in partners? Planning your finances ahead of time will save you from last-minute surprises. The research and planning stage might seem daunting, but it's absolutely worth the effort. It sets the foundation for your real estate investing journey. With thorough research and a solid plan, you'll be well prepared to make your first investment. The third step is securing the capital needed to make your investment. Now, this can be a daunting task, but don't let it deter you. There are several avenues available, each with its own benefits and considerations. Firstly, there are traditional bank loans. These are tried and true, but they often require solid credit history and substantial down payments. It's vital to understand the interest rates and payment schedules before you sign on the dotted line. Secondly, we have private lenders. These could be individuals or companies willing to invest in your venture. The appeal is often faster approval times and flexibility in terms. But be prepared for potentially higher interest rates. As always, understanding the agreement is key to avoiding any unpleasant surprises. Lastly, let's discuss real estate crowdfunding platforms. These are becoming increasingly popular, allowing multiple investors to pool their resources to fund a project. This can offer lower entry costs and a shared risk model, making it an attractive option for many. No matter the route you choose, remember this: financing is a tool, not a crutch. Be sure to comprehend all terms and conditions and don't be afraid to ask questions. Make the money work for you, not the other way around. Remember, the goal is to invest wisely and profitably, not to get mired in debt. The final step is making your first investment. Let's break this down into bite-sized pieces. First, you need to find a property. This might seem daunting, but remember, you've done your homework, you understand the basics, you've researched and planned, and you've secured your financing. You're ready for this. Finding a property involves scouring listings, attending open houses, and networking with local real estate agents. Remember, the perfect property for you is one that aligns with your investment goals and budget. Next, it's time to negotiate the price. This isn't a time for shyness. Arm yourself with market data and don't be afraid to haggle. Your aim should be to secure the property at a price that makes financial sense for you. The final step in the process is closing the deal. This involves a lot of paperwork, but don't let it intimidate you. Your real estate agent and attorney will guide you through it. Keep in mind, this is a marathon, not a sprint. The closing process can take time, so patience is key. And just like that, you've made your first investment. But remember, real estate investing isn't a one-and-done deal. It requires patience and persistence, a willingness to learn from mistakes, and the grit to keep going even when things get tough. With your first property under your belt, you're officially a real estate investor. So, to recap the key points we discussed today, getting into real estate investing involves several critical steps. First, familiarize yourself with the basics, the jargon, the market trends, the property types. Then dive into research and planning. Understand your market, identify potential opportunities, and strategize your moves. Next, secure your financing. Explore all your options, from traditional loans to private funding. Finally, make your first investment. Start small, learn from each experience. By following these simple, manageable steps, you too can get started in real estate investing.